I'm your host Nadira Sadikova, and today is our valued guest Ulrik K, Wealth Management Director at Marlin and Spike. And in today's episode, we will speak about super hot topic. It's again cryptocurrency and wealth management, new regulations, market trends, and M&A insights. Welcome, Ulrich, and I'm really happy to have you on our podcast series.
Yeah, hi, Nodira. Thanks for having me.
How are you doing today? How are you feeling? Today is Friday.
I'm very good. I mean, it's the day after Thanksgiving. The markets were sort of slow yesterday, giving everyone was on holiday, but Bitcoin is up almost 2%. So definitely the holiday spirit showing in the markets now.
That's amazing. So Ulrich, that definitely the first question is now market is booming, and after the election of Trump, that's not like a big news. Everyone knows about it, but still, as you are an expert in this cryptocurrency wealth management advisory services, please tell me about your role at your entity. It's called Marlin and Spike. Give me like more insights about your role, your journey, and your insights about cryptocurrency.
Okay, that's a big question to unpack, but like super shortly about me is that I have a background in technology. I moved into finance around 10 years ago and found my expertise little bucket in digital assets, which is mainly Bitcoin, but of course, all everything else in that world, Ethereum, Solana, what else you can think of. In terms of market trends right now, obviously, the big news is really that Trump was elected president and will be inaugurated on the 20th of January next year. Market has sort of been anticipating that. I mean, if you saw the legacy media, the mass media were sort of on a 50-50 about who would win, Trump or Kamala Harris. But the crypto markets was actually expecting a Trump victory already months in advance. Um, so a lot, obviously, because of that, a lot of people have been front running the trend of Trump becoming president. So I want to say around from September or thereabouts, that started really a positive trend, and it really hit the ignition spark on the 5th of November when the first overwhelming results showed that Trump would be elected. Since then, the market has basically taken off. Usually, when you have events like this, I mean, when you have news in the market, everyone knows that saying that buy the rumor, sell the news. So one would think that you would actually buy the rumor that Trump will become president, and then you would sell it when you actually get the results in. But this is such a instrumental and significant change in the leadership of America that this is instead sort of a buy the news. And if you ask me, I don't even think it's priced in fully yet. The market will take some time to really absorb what a radical change this is, because that means um, less regulation. I mean, Trump is all for deregulating, especially the financial markets. So that's going to play a huge role. He's also had a lot of backing from the crypto industry since he appeared on the Bitcoin 2024 conference. So he sort of owes, I want to say, significant political capital to the digital assets industry. And I think that's yet to materialize. What's exciting for me, obviously, is that first off, the digital assets really became an agenda of a presidential race. But now that it's materializing and we can see the cabinet positions Trump is choosing for his administration, it's becoming very clear that it is overwhelmingly different than the previous administration. And I think we will see sort of the fallout effects on regulation, taxation, and just general initiative for the crypto industry.
Yeah, really, really insightful feedback. But also, please tell us about your Marlin and Spike wealth management strategies and about your clientele. And also, really interesting to know, are those clients you're like serving institutional clients, or is it like retail? It's really interesting to know. And are they coming from traditional business into cryptocurrency? Because most of the people, they don't invest into cryptocurrencies. They don't know what to do. With the flow of their money, for example, where to place it, park it.
Yeah. So, I mean, my outlet is sort of a boutique investment advisory outlet. So we work entirely and exclusively with the institutional private clients. So this is typically hedge funds, family offices, and boutique companies like this. And what we advise about is essentially just digital assets exposure and how you get intelligent exposure in this booming asset class.
Yeah, but also, can you just like, if this is like confidential information, definitely you can skip it. But the size of your fund, can you just like, and also how you are as Marlin and Spike is a kind of a research hub as well, meaning that you have lots of strong research department, right? So yeah, constantly watching the market and identifying new trends.
Yeah, so we're a small boutique investment advisory that has its own internal research department as well. So we're spending a lot of time staying on top of the ongoing trends in the digital asset space. We spend like big amount of our time also looking at macro events because as much as the crypto natives would love crypto to be an isolated asset class, it's really swinging in tandem with what else is going on in the world, as we just discussed. How influential the presidential race has been to crypto has been dramatic. Um, I'm not at position to really disclose asset size of clients, but it's very significant. So I mean, we deal only with institutions, so it's not retail money. Although we are, of course, observing what retail investors are looking at as well.
And also this is like really, I think, that great insight. If you are focused on institutional clients like family offices, right? So like biggest institutional partners, meaning that they have a trust into this kind of collaboration. And are those like your partners mostly coming from the traditional business, or this family offices purely focused only on the crypto investment, or it's like kind of they are diversifying their portfolio?
It's a little bit mixed, actually. I see an overwhelming tendency that I want to say traditional money are just dipping toes into the digital assets economy, mainly via Bitcoin exposure. So what they're doing is basically they're supplementing an already existing portfolio of stocks, real estate, private markets. They are supplementing that with some Bitcoin or other digital assets exposure. I am, however, also working with specific clients that are very, I want to say, technology native. So they are much more on the forefront of the adoption of crypto. So typically, you would see a much higher risk tolerance among these clients because they understand it better. They have a greater tolerance for the volatility and the potential drawdown that these markets are showing. Whereas the more traditional ones, they're still in a phase where they need to adopt the asset class more.
Hmm. Okay, and also one of the really interesting questions for me: what recent regulatory changes have had the most significant impact on cryptocurrency investment, and how should wealth managers navigate these complexities?
I mean, if you ask me, the biggest news of the town, I know it's almost a month old now, but it's just that you have a president elect who has issued NFTs before. He's been present on a Bitcoin conference. His sons are involved in the digital assets economy. He has said on stage that potentially the United States should establish a Bitcoin strategic stockpile. If that's the case, I mean, make of those statements what you want. But if the United States are going to carry through with this and actually start purchasing BTC, I mean, it's just again a structural change for the market on the size of what happened early in the year when the first exchange traded funds were approved for trading the ETFs. So the Trump administration is a big thing. Why? Because I mean, the major thing would be this strategic Bitcoin pile, because that would mean basically putting money where the mouth is. That's significant. Another thing would just be regulatory changes. So, for starters, Trump has sort of already promised that the current SEC chairman, Gary Gensler, who has led a Securities and Exchange Commission, who has been very harsh on the entire digital assets economy, both with they've sort of implied a enforced guidement, you could say. So they've not really stipulated any rules for the industry to follow. Instead, they've sort of just swung the hammer on various occasions, and the whole industry has been sort of like nervous and uncertain of where the boundaries would be found. If that is going to change, because you already have a few like voices now in the SEC who are much more pro crypto. So if that were to change, that means more openness, probably more transparent guidelines, frameworks that companies dealing in the space that they can live up to and they can adopt. For the investor, I actually think this is more security, because if you think about it, the only reason Sam Bankman-Fried would go to Bahamas to actually set up FTX legally is because there was no framework on in the United States. So I think basically reshoring that business via stable and transparent regulation is going to mean a lot. Then, of course, tax incentives. I mean, or not tax incentives, but just tax reform um, is going to be significant. Right now, that there's talks about no capital gains on U.S. issued cryptocurrencies, and this is again a potential um, a potential initiative that will sort of reshore innovation back to the states and not away from it, so to speak.
So you're saying that it's definitely this new regulations will consolidate the market, and we will see more high potential and high qualified projects. And we will not have this kind of FTX cases. It will actually so save our time and our nerves, I can say. Okay. So and can you share your insights on the current trends in the cryptocurrency market and what you believe the future holds for crypto in wealth management?
I mean, the overshadowing topic is still Bitcoin. So Bitcoin is sort of at a place now where it's potentially crossing the chasm of being this niche asset that were only reserved for the people who understood it and could take care of security, take care of their wallet, take care of their seed phrases, all this complicated stuff that traditional investors are not used to. Um, After being traded on the ETFs, I mean, Bitcoin is becoming a bit of a commodity. It's available for everyone. So now I guess time will tell exactly how quick Bitcoin will continue to really penetrate those more traditional wealth manager pockets that it's done so in the past. In the past, it's been very difficult for even if you're a pension fund and you found Bitcoin interesting, you would have no real way of actually getting exposure, because doing it the native way, dealing with the native crypto exchanges, big hassle. You don't know how to take care of security, but with established products, all that is sort of fixed for you. So now you basically just need to make up your mind about what's the risk tolerance toward this thing. So that's the overshadowing, like, real trend for anyone really thinking and like looking for alpha in this conversation about, hey, where should I invest my capital? I continue to think Bitcoin is the asset that offers the best risk to return. But if you're going or moving outside of the Bitcoin realm, I mean, there's a certain amount of trends that are really outspoken right now. one that we cannot avoid is the whole meme sector.
Exactly. Yeah, it's like oh my god, that's something insane happening on this. Yeah.
It's really crazy actually. It's sort of already at the same heights as the NFTs were back in 2021, which says something already there. But I think it actually has a power to transform how communities are formed, because it's sort of a way to capitalize different communities. And I think that idea in itself is sort of unique. And I think that's probably continuing to have legs as the market cycle matures. Goes without saying that when you're investing in meme coins or in any assets that sort of doesn't have a real intrinsic value, I mean, you're taking a tremendous risk. The risk that you will lose everything is very high. So you really have to think very carefully about what's the maximum risk I would take into these assets, and you have to be very critical again with asset selection. I think the lowest risks bets you can probably make in the meme sector would be Doge or Pepe, which for me is sort of more established assets that has existed for a longer time, and I think they still have legs to grow in this bull market. There's the funny association, I'm sure you know, but also part of the Trump administration, a part of the operational organ is going to be this Department of Government Efficiency, uh, which Elon Musk is sort of heading. Um, the fact that the naming convention of that coincides with the biggest meme coin in existence is sort of telling, and I think it will have legs almost just because of that.
So and you have like your own also portfolio. I mean, where you're investing in meme coins, but you're super careful and you are making some kind of a, I don't know, DD, deep DD, and KYC on all of those projects because now the market is really huge. But what can you comment about this hamster combat? Like, I mean, hamster, not hamster combat. I see the hamster, the tapping. I mean, have you heard about it?
Hamster Combat? No, so I don't even know this one.
It was so famous. Even my son was just playing. It was like really really big story actually. I mean, yeah. So and it was there were lots of controversies about this project. They became like super famous, millions of users within short period of time, and then it's like kind of a you are tapping and creating your own crypto exchange. So there is an hamster team, and the more you mine, and those mined coins after the after this hamster project will be how to say onboarded by one of the crypto exchanges like Binance, etc. And then all those coins of those users will be converted in a real token like USDT, so stable coins. But I don't know. I think that they were also listed now on the crypto exchange, but I don't know how users like did they get their gains or not. Also, it was like lots of so happened this kind of rumors, shady stories. It's like a scam, not scam. Still, I'm just trying to understand. You know, there are lots of shady stories. I mean, around these meme coins actually.
Absolutely. I mean, it's an industry where you have to remember that anyone, anywhere, can deploy a new token which will go live for trading in a matter of, like, I want to say minutes, but actually seconds. The tools available now makes the barrier for entry for distributors of these tokens are very, very low. So obviously, because of that, there's an overwhelming amount of them, and I want to say 99% of them are absolute hogwash, and I would stay very far away. If you decide to really like trade in these things, it should be with very limited capital, like capital that you wouldn't uh, miss if you were to lose it all. Um, so that's an obvious trend. I mean, I don't even know the hamster combat. Obviously, I missed something there. It seems, but um, there's a lot going on. I mean, a big theme right now for these meme coin is basically AI agents. So AI is a tremendous big theme Nvidia, I think for a short time early in the year, actually had the biggest market cap of all companies. That's crazy. ChatGPT is taking the world by storm. Other big LLMs is sort of following the tailwind of that. So AI is just gigantic, and we're all sort of betting that it will be bigger in the future. So this whole narrative of theme has sort of spilled over into the meme sector as well, where people are deploying autonomous AI agents to essentially be the the issuer of tokens. So you can basically launch a token and you can have an AI agent operate it. It can chat with you, it can broadcast information, you can interact with it. And interestingly enough, it can actually participate in a real economy also. So, I mean, the only thing the AI agent will need is sort of a wallet address, and it can participate freely in the ecosystem as well. So that itself is very interesting.
But do you also apply AI in your wealth management, so operations and strategies? And what is your opinion about AI? Because there are like advantages and disadvantages of AI application as well.
I mean, I'm a big believer in like the application field for AI altogether. I think I have subscriptions now. Today is Black Friday, so I'm probably gonna prolong some of them for a year. But I have it for ChatGPT. I have it for Midjourney. I just bought Claude from Perplexity as well. I sort of use all of these for um, various research purposes. So where I'm coming from right now, I mean, where investment research used to be very, very tedious and manual, I can actually automate a lot of the bigger, like I want to say the a lot of the initial legwork. I can just hand that to the LLM, and I get an initial idea. Um, I also think Grok is super interesting from XAI because it's plugged into the real-time Twitter data or X data. That's also sort of interesting because you can sort of get a snapshot of what's going on, like what is the mind share of all the users on Twitter. What are they actually spending their time on? Um, so yeah, big proponent on that. I use it for research purposes and general text. I'm of course very um, conditioned to also not just relying 100% on it. I think too many people they see it as the like a genie in a bottle right now, and they just try to hand all of their thinking to these LLMs. I think that's a big mistake. I think you should be critical. I think you should still take it with a grain of salt. Even the results you're getting can have big margins of error.
But also, can you kindly tell me that let's talk about like M&A and what in what kind of projects you are investing? Do you have a kind of an investment arm? Because you mentioned that you are sometimes acquiring some small entities as well. I would like to know more about this, please.
Yes. So essentially, I mean, I would say the bread and butter or majority of the focus area of what I'm doing is sort of digital assets, but digital assets is actually both public markets like BTC, ETH, everything you can trade on an exchange liquidly, but it's also private markets and the deals that you can basically invest in there. That has a big interest for me as well. Um, Especially, I mean, there's sort of different trends and things I'm interested in, but I'm very, I want to say, holistically interested in everything technology, digital assets in a private deal capacity. I do have an overweight now of, I want to say, focus on things happening in the Bitcoin ecosystem. So, um, sort of leaning on what we just discussed on how the Bitcoin ecosystem is flourishing towards traditional institutional investors. I think Bitcoin also has a potential to basically develop a little bit more so that both companies doing services tied into Bitcoin, doing payment solutions, doing a protocol layer around Bitcoin or similar. I think that has a gigantic potential, and that's something I'm spending a lot of time on right now. So that would be one focus area, I would say.
But are you sourcing those projects? I don't know, ideas like, just is it like kind of a business networking or just references from your friends, connections, etc.?
It really depends on the situation, I would say, and that for the specific deal. I mean, I go to a lot of conferences every year. That's one way to meet people. Usually, when you go to these digital or technology conferences, you would find a lot of people that are working with niche subject matters, and this is where you find like people if you just go out and explore. But obviously, as you do that enough, and as you build a resume and a network, you also get introductions. The people in my immediate social circle, they all know what my business interests are. So whenever they stumble upon something they think is relevant for me, they they introduce it to me. So uh, that's sort of like social capital earned through a like multiple years in the business, and I guess that's the best answer I can get. There's no real secret sauce to how we basically find these private deals. It's just be out there, be available, and participate.
Exactly. And also, I really would like to know your opinion. So there is a statement, and most of the people, so there are like lots of contradictory statements. One camp of, I mean, people, they think that cryptocurrency is a part of fintech, but there is another so group of people. They are saying, please don't even consider cryptocurrency as a part of the fintech. It's not like, however, so as an fintech so influencer and journalist, I can say I think that cryptocurrency is a part of fintech because there are lots of happening. Yeah, I mean payment methods, etc. And what is your opinion on this? So yeah, notions.
I guess, I mean, it doesn't concern me so much because it's sort of like a terminology or definition question when it boils down to it. But for me, I mean, if I would just define fintech, that's sort of like technology meeting finance in a way. Um, I would say traditionally it has something to do with payments and transactions, but isn't that also what, for example, DeFi applications are doing? I mean, if you isn't that somewhat similar? So I don't know if that's the case, then perhaps it can fall under like particular DeFi applications can fall under the fintech definition. But if you think it in, for example, Bitcoin, I'm just using that as the major public blockchain, I probably would not define that as a fintech solution because it's sort of decentralized. I mean, it's not issued by anyone. So I
But still, it's not. Yeah, it's not issued by anyone, but still we have to comply by regulations, right? I mean, there is like I'll say some kind of a rules that we have to be in that framework.
yes and no. I guess if you are I mean, Bitcoin doesn't have to like adhere to any rules, right? It just exists. You cannot stop it. You cannot guide it. You cannot set limitations for it. It's just out there for everyone to use. But for the participants of the network, whenever they are doing something that basically bridges away from that, like if you, for example, sell Bitcoin at a cryptocurrency exchange, you have to adhere to the rules of the cryptocurrency exchange. So it sort of extends to that. So a cryptocurrency exchange, I would definitely say, fall under a fintech business or fintech definition. Bitcoin, on the other hand, may not, but we have to remember that the whole definition of like cryptocurrency or crypto assets, I actually think crypto assets is a better definition because if it's a cryptocurrency, it's typically something that is more similar to a traditional currency that's typically about exchange and it's about transactions. But what about Ether, for example? That's probably like that's more smart application protocol. So that's probably not a currency. That's probably like some other sort. So basically, under the digital assets umbrella, you have different sort of definitions. So it's very difficult to take all of them and just apply to one definition. And this is, I think, one of the major reasons why regulators also have such a tough time figuring out how to treat these tax wise, regulation wise, and so forth, because you can basically have something that mimics the nature of a commodity like Bitcoin, maybe, or currency like Bitcoin, and you can have something completely different, which would more mimic the nature of security. That could be Uni, like the asset Uni, which is the native token for Uniswap, for example. That's probably more related, like or more in the sense of a security than it is a currency, right?
Yeah, and also, what do you think? Like, what is the best jurisdiction for crypto-related projects, like to initiate and start and manage their businesses?
I actually saw a presentation in Singapore some weeks back on this, and I think they sort of crowned UAE and Singapore as the top one and top two jurisdictions currently. But I mean, this is a moving target, right? I think it also really depends on what you're doing. I think the EU is doing a tremendous job by being one of the first with sort of a framework for entities dealing with crypto assets. So they have this MiCA framework that's just being rolled out now. That's something that's probably a positive for entities in Europe. United States has been really awful the last few years because they've not really had any strict guidelines whatsoever, and it's been very difficult for them to operate. Um, then you have the offshore jurisdictions, which are also, that's basically less regulation and thereby less oversight, but potentially also the risk that not all processes are overseen correctly. So you will have less oversight and supervision on activities. So that also bears a risk, right? So
But I also watch the tendency that now most of the project they are leaving offshore zones because there is a difficulty to open corporate bank accounts in the how to say prominent jurisdiction. They don't wanna go to offshore zones anymore because they cannot make any business. So yeah, it's changing, definitely.
absolutely. I mean, moving targets, offshore jurisdictions have a very hard time getting through the needle eye of, say, the regular banking industry. So if you find a bank in the United States or in Europe or in Asia, I mean, they still have to fall under, again, follow the same rules and regulations for all their clients. So crypto companies obviously poses a significant risk there, and if they are located also in a what's deemed a high risk territory, I mean, that just makes it more difficult.
So, okay, and what how you're handling the stress? I know that like cryptocurrencies market are like super dynamic and a bit stressful. So, and I can see that like you are super quiet. I think that maybe you are doing meditation or yoga. So please like share your insights because most of the crypto founders of crypto related projects, even the fund, they're a bit like on hype. They're like on something like, but you're like super really quiet. Yes.
I think, I mean, you have to detach yourself a little bit from. It's obvious that if you're dealing with an asset class that is so volatile, both in price fluctuations, with moving regulations, with regulatory oversight, and whatsoever, I mean, you are basically positioning yourself for a very bumpy road. So you have to detach yourself a little bit from that emotionally and just accept that that's part of the journey. Um, I think, for example, like the volatility with Bitcoin is part of its opportunity, right? I think if you didn't have the volatility of Bitcoin, I mean, you would not have the potential upside. Also, that's basically the definition of an industry maturing. So you have to welcome it.
And the last question is, what is your prediction for the Bitcoin, let's say 2026?
2026. That's like end of 26 or beginning 26.
End of 26.
Okay, so that's 2 years from now, and
No, beginning of 26. So once Trump gonna come to its like sit position 20th of January and starting like 1 year, what is your prediction? I mean, by the end of 2025. Yeah.
oh, that's it's a tough one, and I mean, nobody in the world who would answer those.
Yeah, I will pin it and then I will check it by the end of 2025.
Okay, actually, I did the same exercise just in private in the beginning of this year, and my guess was 94 thousand US dollars for the end of this year, and I think the year started around 30K or something. So in hindsight, that has not been too bad. Um, 1 year from Trump getting inaugurated, I would think Bitcoin is probably sitting somewhere between 150 and $250,000. And that comes with all the disclaimers attached. I mean, there's definitely some risk that that prophecy would not fall through. I think that Trump getting elected into office, I think that's going to be very volatile for financial markets in general. I think probably geopolitically there will be a little bit more stability. I'm seeing the first few signs now that potentially the Ukraine-Russia situation and the Middle Eastern turmoil would potentially get more quiet. But Trump also has a very radical agenda, and I mean, if you're looking to really make change, that's also going to give swings for financial markets. For one of like his key points now is basically bring down public spending. So that's going to be a major, I want to say, shift up in the status quo right now. So it's very difficult to tell. I don't think anyone would really have a clue. But to me, it seems obvious that Bitcoin, if you look at it on a very like a long enough time frame, it's on a positive trend. Is basically nourishing on a lot of different factors, and I would say that political instability and declining belief in democratically elected public officials are two very important ones. Um, Declining belief in the banking sector as well. I don't think that's going anywhere. I think that's only increasing in the future.
That's amazing. So your suggestion is going to be 100, 100 and 150K, and we will check it. We will come back. Maybe we will take another interview session with you. So guys, like stay tuned. Thanks for coming today with us. Our valued guest, wealth manager, wealth director of the wealth management cryptocurrency wealth management company, Marlin and Spike. And I'm your host, Nadira Sadikova, and this podcast series for financial IT.